Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on with the markets? Well, we had the big downdraft, right? And then we got a little bounce. Now, how high will that bounce go is anyone's guess, right? My guess would go back to about the 50-day moving average on the S&P. So maybe it's got a little bit more to run before we come back lower. Now, that's just my take. The Moon Boys will tell you that the crack up boom is not done, that we're going to go back and make new highs. I don't see a new high in the NASDAQ coming anytime soon. And maybe they push the Dow Jones up, maybe they push the S&P up, but we've come down about what, 15, 17% on the NASDAQ, bounced off that level, and now we're trying to see how high we can bounce. Now they could push it close to a new record high, but my call is for a lower high and then we come down and make a lower low. I don't think this correction's over yet, but I don't think it's the big one either. I don't think this is the big 80% downward move. Now, why do I say that? Because they're still buying the debt. You see, when the big crash happens, you're going to see the debt, the bonds will be crashing hard. They won't be going up like they are now. If you look at the TLT, it had a little bit of rally, right? That means this is not the big one. That means they're still in there. They're buying the debt. But when this thing goes, it's going to start in the debt market, and the debt market's going to be free falling, and then the stock market's going to follow, and that's going to be the big one that brings everything down. So this, in my opinion, is not the big one. Now, it could turn into the big one if that debt market starts to drop really hard. All right, so let's get over to the real estate side of things. Well, actually, I want to talk about the Federal Reserve and how they pertain to real estate, because the Fed is responsible for propping up real estate, right? I mean, they had interest rates at zero for 14 years, created the real estate bubble. They bought $3 trillion in mortgages since 2008 to reinflate the bubble. So they're pretty much in charge of the bubble. Now, you see, I believe we should get rid of the Fed altogether. Now, a lot of people don't understand this. So let me take a minute and try to explain this to you. See, Fed started what? I don't know, 1913. So around 100 years ago. Okay. All right. So in that 100 years, they had one job, and that's keep prices stable, right? Okay. Now they've lost 99% of your purchasing power. What was a 20-cent meal back in 1913 is now a $20 meal at McDonald's. It went up 100 times. Not 10 times, went up 100 times. Went up from 20 cents to $20. Okay, so the price stability that the Fed promises, they get an F, right? They failed at. They've lost 99% of your purchase power. That doesn't scare me. We are where we are, right? Okay, now here's what scares me. It's happening at a quicker rate. It's happening as a hyperinflation is going to take charge. Okay, so in the next 100 years, I don't know what will happen, but I say in the next 10 years, they're going to increase prices 100 times. 100 times in the next 10 years. In other words, that $20 meal you get at McDonald's is going to cost you $2,000 if McDonald's is still around, because they're going to hyperinflate this. They're going to decrease your purchasing power at a faster rate. Took them 100 years to get rid of 99% of it. Guess what? They're going to do it again. This time they're going to do it in 10 years. $20 meal become 2010 years from now. We'll see how that plays out. Maybe you'll still be watching my channel. Maybe I'll still be around. Who knows? But anyways, that's my take, right? It's happening at a faster and faster rate. You see, they have to print money at a faster rate. They printed 10 trillion for the last pandemic, but the next crisis is going to take 20, 30, maybe 50 trillion. Okay, so it's happening quicker and quicker and quicker. See, the Federal Reserve is public enemy number one. They're the ones that come in and steal all your purchasing power. Now, here's the thing. All right, everybody's upset with the Fed because on Wednesday, they left rates the same, and then we had the crash Thursday, Friday, Monday, right? And everybody's going, oh, the Fed messed up. They should have lowered rates. Look, the Fed should actually keep rates high, if not raise them higher. They haven't conquered inflation by any means of the word. Inflation is still out there running rampant. They should actually be raising rates, but they don't want to do that. Why? Because it sends everything back to reality. Sends the stock market back to reality. Sends your house price back to reality. So they've got to lower rates. Okay, so the Fed's going to lower rates. It's a complete mistake. It's the wrong move. Why? Because you're going to see inflation come roaring back. That 9% number that we print, that's nothing. That's nothing. You're going to blow right past that. And mark my words, this is their own way of measuring things. When it was 9%, it was really 20%. Now when it jumps to 10, 20%, it's really going to be 30, 40, 50% inflation. That's why that $20 meal is going to become $2,000 within 10 years. Could happen quicker. That's just my take. If it scares you, you got your own take. Go listen to all the thumbs up channels, all the ones that blow that sunshine at you. But on this channel, I just give you my opinion. Maybe I'm negative. Maybe I'm not negative enough. I don't really know. But so the Fed is going to pivot. They're going to lower rates. Okay, so as they lower rates, you're going to see inflation taking back up. So why do I say when the Fed pivots, it's going to destroy the housing market, going to destroy the housing market? But Mike, inflation's good for the housing market. It'll continue to go up. Look, when the Fed pivots, inflation's going to take off. But the long end of the bond market, the long end, the 30-year mortgage money, it's not going to drop. You're seeing right now, I don't know, what we 6.5. People think it's going to come back down. No one's going to give you 30-year money at 6.5 or below. It's going to shoot back up 8, 10, 12%. House prices will be just there'll be no buyers, right? I mean, there's hardly any buyers now, but you get the rates on the long end. Now, I believe they're going to shorten, lower the short end of the curve, the 2-year, sure, the 6 months, sure, they'll lower that. The Fed funds rate, they'll lower that. They don't control this long end, and they're very arrogant if they think they do. This is controlled by the market itself. And as we get that inflation number taking off again, inflation comes in waves, we're going to blow right past their 9% number, get up to 10, 12, 15, 20%. You're going to see that long end of the bond market is also going to chase that up also. It's going to chase it up. It's going to chase it up to 8, 10, 12, 14% for a mortgage. And there's no buyers now. Well, why is that going to bring buyers? It's not. So if you got to sell your house, and somebody will, and I know not in your area. Your area, nobody dies. I get that. Nobody loses a job. Nobody gets divorced. It's a perfect area. Nobody ever has to sell. But you get just one person that has to sell when there's no buyers. What happens? Prices plunge, and they're going to plunge hard. Look, we're going into Great Depression stuff. I hate to bring the news to you. We've been in a recession. We're going to hit into the Depression era stuff. It's scary, right? It's very scary. But that's just what's happening, right? Now, I don't think we need cheap money. The Fed's going to do what they do. Lower rates to zero and print trillions and trillions and trillions of dollars and kill all your purchasing power, right? Okay, so that $20 Big Mac with Coke and fries going to become $2,000, right? Okay, because now the Fed, when they pivot and they lower the rates and that inflation takes off, they're going to look like idiots because they're going to start chasing up that inflation. So they're going to pivot again. So the first pivot won't be the last pivot, but when the first pivot happens, that's where the bad stuff starts happening. That's where things start getting out of hand. Now look, they have to do it. I get that, but they have to. But there's no alternative, right? Excepting to wipe out the Fed, start over. Okay, that's my take. But okay, so you got unemployment now. Unemployment, right? Was at 3.3%. Now we're at 4.3%. What happened? Well, a lot of these businesses, they can't afford this high interest rate, right? So the Fed's going to lower it, try to save the businesses. But once the inflation takes off, they're going to have to raise it higher. And then all these businesses, the zombie companies, they're just going to go away. And that's 20% of the companies are just going to be wiped out. They're not going to survive the depression, right? Okay, now Intel, what happened to them? They just crashed and burned, right? So they're laying off 20% of the workforce. I don't know how many that is. Probably like 50,000 people, right? Okay, so you got Intel, massive layoffs coming everywhere. More and more layoffs. Now you got these zombie companies. Once again, they don't bring in enough cash flow to even pay their interest on their debt. You see, they have a lot of debt. The only way they stay in business is getting more debt. If nobody gives them more debt, they go out of business. It's that simple, right? It's that simple. So you got 20 out of every 100 companies in the S&P 500 are going to be gone, right? Okay, so you got 100 S&P 500 companies that are going to be wiped out. You think that's going to be some job loss? Yes. Do you think that's going to be good for the housing market? No. Do you ever think your house is going to go up? Do you think it's going to stay at these levels? No. That's my take, right? Okay, now what should you be doing, though? What should you be doing? You should be preparing now. You should be building an ark. Look at, but Mike, why would I build an ark? We got the best economy ever. Right. Well, you're going to get laughed at, right? I mean, when Noah was building the ark, the sun was shining, but the rain's coming. The rain is coming. Noah knew it, right? Because he heard from God, and God told Noah, the rain's coming, build the ark. Look, you're going to need to build an ark. Why? Because the rain is going to come again. This is not going to last what they're doing. It's impossible to sustain this. House prices up here are not sustainable. Stock market at record high is not sustainable unless they print trillions and trillions. Then your purchasing power just goes down, right? So you need to build your ark. Now, what should you put in your ark? Well, I'd start with some food and water. Doesn't that sound like good? Have a little extra food and water, right? Oh, maybe even like a little protection just in case there's rival arks. Maybe there's going to be more than one ark, and you got to protect your food and water, right? All right, so now back to the financial markets. What would I put in there? Would I put dollar bills in there? No, I don't think I would. They're not worth anything. Would I put gold and silver in there? Yeah. But Mike, you could put Bitcoin in there. It takes up a lot less space than gold and silver. And after all the rain stops, Bitcoin's going to be worth $10 million. Maybe go that way. I'm telling you what I'm doing. Food, water, security, and then gold and silver for the financial end of things. Look, that's just what I'm building my ark with. Now, you do you, I'll do me, but I think my ark's going to be just fine. Now, look, I feel sorry for people because not everybody watches the channel, and the ones that do watch the channel, a lot of them just tell me, Mike, you're a crazy man. You're just blowing all this gloom and doom stuff at us. Where's the sunshine? Can't you tell us a happy story? I mean, one guy comments, it was funny, he goes, why do you hate all rich people? I don't hate rich people. I love rich people. Rich people, they're my clients. They're how I make a living. Look, I'm well-to-do. I'm not rich. I get by, but a lot of people think I'm a rich person that hates other rich people. That's what this guy is telling me. What a crazy guy, right? I mean, I love rich people. I want to become one of them. But I'm working on it, and I'm doing all right. Why? Because I'm building my ark. Now, when I build my ark, what do I think is going to happen? Well, I think everything's going to revert back to real money. I think everything's going to revert back to gold and silver. So against the dollar, gold could be 40, 50,000, right? An ounce of silver could be up there around 10, 12,000. Wouldn't that be crazy, right? What if Tall Mike got it right? Well, he'd be a wealthy person, wouldn't you? What if Tall Mike got it wrong? Oh my goodness, you'd be stuck with some gold and silver. It'd just be terrible, right? I mean, it'd just be the end of the world. You'd have all that gold and silver, and you wouldn't know what to do with it. I look at investments. What happens if I do it? What happens if I'm wrong? What happens if I'm right? So this is what I do. I invest in gold and silver. If I'm right, I'm going to become in the wealthy people, right? If I'm wrong, I'm going to stay right about where I am and keep plugging along, keep selling houses, keep doing my YouTubes, keep enjoying life. I understand the sun's shining now, but the rain is coming, right? I mean, people laugh at me for buying gold and silver. They call me an idiot. You could have been in the S&P. Well, I got news for them. Gold's outperformed the stock market for the last 20 years. They don't tell you that because they can't make any money when they sell you gold. They keep you in S&P. They collect those fees. That's what they do. That's the whole game, right? That's the whole game of this debt-based society we live in. We got to give the consumers some more debt because we're a 70% consumer-based society, and consumers are out of money, so they need some more debt. So Powell's got to lower that rate so the consumer can go out and borrow more. Look, you can't get rid of debt by getting more debt. You got to fix the problem at some point, and Jerome just don't understand that. Nobody understands that. No politician understands that. We got to get rid of these people. Get the people in there that understand sound money. Get the people in there that understand we messed up. Get the people in there that want, there's two types of economists. Anyways, there's the Keynesians, right? They're in charge right now. They're the ones with the Fed. They're going to lower rates. They're going to print money. They're going to make everything all right. And then you got the free market, right? The Austrians, right? They believe in real money, gold and silver, and they believe in free markets. And if you get to that side, you're going to be painful getting to that side. But once you're to that side, about 90% of the problems are solved. But everybody wants to stay over here because they don't want the pain. They want to stay with the Keynesian economists, right? Look, go Austrian. Austrian's the way to go as far as economists go. Free money, go. Not free money, but real money, gold and silver. Maybe it'll be free. Money will probably be free soon. I think they will go with UBI, handing out UBI every month to people. Maybe you get $1,000, $2,000 to go out and spend to help the economy. Look, you can blow this bubble up maybe another another year or two, but it's all going to come crumbling down. If you got your arc ready, you're going to be just fine. I'm Tall Mike. You like this stuff? Give me the thumbs up. Why not? Punch that subscribe button. Get out there, everybody. Enjoy the day. Bye-bye.